Jonathan, you've been talking about the lack of a 90% down day for stocks, and I don't know what the final numbers are, but if we didn't get there today, we're darn close. What do you make of the action today, and what does it tell us about what could happen next?
Yeah, thanks, Scott. Well, we didn't quite get there. We finished about 87% downside volume on the NYSE. But the reason that's important is because in order to get that, you have to have the majority of all stocks declining and a lot of volume in those stocks. And what we've been discussing the last couple of weeks is that we've reached a point where even the defensive and the high momentum stocks like your staples, utilities, mega cap tech, all the hideouts that really people were rotating into during the market volatility, those were ripe for a sell-off and ultimately in corrections, even though the generals or the leadership names finally succumb. And I think that's what's happening right now. So the fact that we got close is interesting. We would just say that even if you get a 90% downside day, it doesn't guarantee the low is in. But I think, the action of late is certainly consistent with, what we've been looking for.
I mean, you've been talking about S&P. I'm looking at now, you're at 4270 or so. You've been talking about the likelihood of getting back around the 4,000 ranges. Is that where you stand still today?
Yeah, I think that's pretty fair. Again, we've seen pretty significant selling under the surface for a while now, and those areas of the market, the semis, the banks, home builders, biotech, those areas of the market continue to remain weak. Even if they outperformed today, they still went down. And then those really heavy hitters in the market is what's really going to probably get that final washout under 4,000 in our view.
Hey, Krinsky.
So give me then. Yeah, go ahead, Josh, please.
I'm sorry. Two things I want to ask about. RSI seems to be in kind of a no man's land. Today might have changed that to some extent, but 45 RSI on the S&P, it's not washouty enough. I feel like we need to see closer to 30, which is where we were in the first week of March before the big bounce. But maybe that's asking for more of a washout than we need short term. And then the VIX back at 27, 28. Which is an area where I feel like you have to start making a buy list. That seems to be the top. 30 seems to be the top of the new VIX range. What do you think about those two metrics and those two levels I'm referring to?
Yeah, I mean, look, RSI is just one indicator. At the end of the day, everything's, every indicator is a derivative of price. And so, we'll certainly look at that if and when we get a little bit more oversold. But I think, you have to remember we're at the same level in the S&P essentially that we were in late January. And so you could argue that we've kind of just gone sideways for a few months, worked off, some of those oversold conditions. I think certain metrics are certainly getting a little elevated. The put-call ratios were up today. So we're starting to get a little bit of fear. And the reason that's happening, right, is because the hideouts in the market are finally getting hit. And so people felt okay when they could, hide out in Microsoft and Google and some of the defensive names. But once those start to get hit, and there's nowhere to rotate into, that's when the fear starts coming out. And I think that's why you're seeing the VIX elevated and put-call ratios elevated.
You've helped us understand these markets better today, Jonathan. I appreciate you coming to the phone so quickly on this Friday for us.